I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market had another week of attempted moves to the upside, followed by downside failures. While everyone knows the Fed is about to initiate a policy change, though they're dragging their feet in a sickening show of ineptness, focus was clearly on Russia and Ukraine. Monday, Fed Bullard, he talked really hawkishly, and Fed George came out and said that they are considering asset sales to control inflation. And the U.S. said that Ukraine, their embassy was threatened, so they were moving people or moving that embassy out of Kiev. And there was a lot of up and down chop on Monday as oil moved up over $96 a barrel. Tuesday, again, a lot of pre-market chop as news came out that Russia was advancing on the Ukraine border. And then there was a report that said Russia reported they were just doing an exercise and they're going to pull back troops. But that turned out wrong. The S&P 500, well, it moved up 70 points pre-opening on that news that Russia was going to pull back. And that really held all day. The market really ignored the huge inflation number that came out, the PPI up 1%. Year over year, that's an astounding 9.7% on the upside. But that was ignored, as there was relief over Russia temporarily. Wednesday stocks moved down. There was no evidence of Russia actually pulling back. That proved to be a false report. And there was some short covering that came in later in the day as news came of the FOMC minutes. The S&Ps had been down 40 points, and they rallied all the way up to plus 20 points. As the minutes were not quite as hawkish as expected, shorts felt that they needed to cover. Fed said they're really still on course, but they're not ending their purchases of securities sooner. That means they're still building their balance sheet, still easing while they're getting ready to tighten. But the market did look at that as maybe not quite as hawkish as expected, and they bid the market. Thursday, President Biden said invasion is imminent, speaking of course, Russia going into Ukraine, and said this is a crucial moment. Stocks fell all day long, barely able to even get a bid, with the S&P 500 crossing the minus 100 point area late in the day. There was no sign of Russia backing off, and there is actually a report here on Friday that Russia has built their troops up to 190,000 on the border. Thursday, Bullard again came out and said inflation could get out of control and we need to be aggressive. Friday stocks, well, there was a bid early on news that came out that Secretary of State Blinken was going to meet the Russian counterpart Lavrov next week. So they had bid the S&Ps up plus about 30 points overnight. But here on a nervous option expiration day, there are basically no buyers. The market is very heavy as there is supposedly some escalation of fighting on the Russian-Ukraine border. And Putin came out and said that this situation is deteriorating. That got the market nervous, and what was just modest overnight gains became losses. And now here at midday, the S&P 500 is down about 30, getting down near the low of the day. Personally, I think Putin loves this. He's in control. It's all a power play. He's got to pay his military anyway, so he might as well put them right on the Ukraine border. and he really has the limelight right now, and he probably loves it. It's a hit job on the U.S. markets, which I'm sure he loves also, and also an energy squeeze. Oil was beginning to come down yesterday and today, but today gets a bid back as it rebounds on this Russian news. And of course, this increases Russia's oil income. So everything about this is really, I would say, what Putin wants. He probably is going to stay in this position a long time. I wouldn't be surprised if he did not invade Ukraine, as this is all going his way. Back to the inflation discussion, Fed discussion. There's an article in Zero Hedge about breaking down this inflation data. And it talks about the pipeline of the PPI continuing to show more inflation is coming. Let's take a look at this slide right over here, which I think is quite valuable. This was a source was Bloomberg, and Zero Hedge put this out. And this shows the CPI minus PPI, which is a U.S. corporate margin proxy, is negative for the 13 straight months. That means that input costs are not all flowing through to the output costs, which would be for consumers. So that means that all of these costs are kind of getting stuck in the corporations. And of course, that's really bad news. This, of course, Fed created as prices go up, and if they can't get passed on to the consumer, then earnings go down. And we've seen that as stocks have just been absolutely taken out to the woodshed and shot. This is trouble for stocks and for the Fed because either you have to raise prices for consumers or you have to eat them and earnings fall. So this is a really tough situation. And this is just a good example of how the Fed has backed themselves into a huge corner. For the stock market, well, it's following our analysis pretty closely, moving down in the period that we thought was big risk, and there still is huge risk moving forward in February into the April period. That's what we expected. Indexes, well, they don't really reflect the massive destruction that's going on in many stocks. Roku, as you could see, down huge today, the biggest loser for the day in the indexes, down 20-something%, falls from a high of 490 down to about 104. So that's, what is that, 80-something% loss? Well, you can also look at the fantasy land stocks and Peloton and Zoom and Etsy and Roblox and a ton of the other ones. The sure innovation stocks, which of course is really killing the ARK fund. Because you can, of course, hope for innovation to work, and it makes sense that it will going down the road, but sadly, when you pay stupid prices for stuff, well, this is the result. Indexes, we're still holding with modest losses in what has been a rotation, with the S&P 500 at worst level down about 12%, now down about 10%, off of its peak. But before this is over, by sometime this year, the bear market will be very apparent in the indexes too, and those index losses will show the full effects. We think that the March-April low time frame that we've been looking at is just the first low, and that will be lower than we are right now. For the week, the stock indexes, S&P 500, Nasdaq, Dow Jones, down about 1.5%. The Russell, the strongest of the indexes, I'll show you that later in the show, now slightly to the downside. 30-year bonds, not much change for the 30-year bonds, with the 10-year yields down about 2%. They're trading about 1.93% for the 10-year, but made a high of 2.06. You must watch our Future Speak show on Wednesdays because we look at these commodities and futures in detail. And we have been talking about the bond market getting hit very hard and yields getting up to these levels. For months we've been talking about that. And now we're getting to an important time frame for the bond market to be making a bottom, potentially ahead of the Fed. But to get deals on that, to get the specifics on that, please do watch Future Speak show on Wednesday. Gold, that moved up for the second week in a row, up about $36 now for the week. Really moving on inflation and also the fact that money is moving out of crypto. It had one little blip to the upside, and I'm going to do a little analysis on Ethereum in just a few minutes, and I think you're going to find that really interesting. Silver up about 35 cents on the week, but we still see the time frame of April as the period where this market will continue to consolidate into, and that come sometime May and moving forward will be a much more favorable time. The dollar didn't move very much, trading in a range and about unchanged on the week. And oil market, even though it rebounded here from its lows on Friday, still down over $4 on the week, finally getting a correction, which we think will continue into mid-March. And that actually may say something about Russia-Ukraine. If the oil market continues that consolidation without an upside spike, it's probably because Russia didn't move, which is what I would guess would be what will happen. Like I just said, I think Putin loves this. Coming up, Arvi is going to give you a preview of stock sectors, and he's going to teach you some great ways to do your short-term swing trade planning. I'm going to give you a cycle analysis lesson looking at Ethereum and looking at the correlation to Bitcoin. Do not scroll forward. You must see our level 4 and level 4 plus special, because this really is an opportunity to get everything we do with our huge analytical team. And what we do is teach you about the markets and trading in this style of analysis all of the time. And then I'm going to look at a short-term analysis in the stock market indexes. So you're going to find that incredibly interesting. All right. I want to remind you, go to askSlim.com and explore that website. If you're new, you can become a free member, or you can maybe take a level 1 membership and get a real good sense for what we do. Level 1 memberships actually now get our stock index report. That's a daily report for index traders, and I think you'll find that phenomenally good. If you're on YouTube, please do subscribe to the channel, click our notification bell, and do like this video. Give us a thumbs up. On Twitter, follow us at askSlim, and for membership info, questions, and our huge offerings of education and analysis, you can write to Matt at askSlim.com. This is a stock sectors preview. Every single Thursday, Arvi, one of our cycle analysts, looks at sectors in the markets, and he either brings a specific sector which he does analysis on, or he looks at short-term swing trading setups using our methodology. Our methodology combines cycle analysis with momentum analysis and what we call swing high, swing low analysis, where we look at support, resistance, and projections. And we look at time and price. So putting all of that together, we come up with a sum of the evidence for the highest probability for trade ideas. In this video, for members, he looks at 6 long ideas and 5 short ideas. You have to be a level 2, 3, or 4 member to see that whole video. You want to see what we're doing, watch this preview, because Arvi does a fantastic job teaching you, looking at DE, which happened to report earnings and did really well, and he's going to show you why this is a positive setup. So please watch Arvi.
So this is a beautiful pattern. I did highlight this one on Twitter. Extremely strong, nice looking base that's forming here in deer. I love when we have an underlying that goes sideways for multiple months, builds a lot of energy, you can see, and we're looking for this to really break out. We have all of these green lines here. These green lines do point out the prior cycle highs, and you can see we are just right near the top of that level right here. Let me modify this slightly. You can see there we did back off very slightly versus that prior cycle high at 434. Overall, this is poised to break out, in my opinion, and get into this zone here on the upside from 415 to around 434 or so. So still looking for meaningful upside here in deer, and note that we still have positive momentum here on the weekly time frame as well. If we go ahead and shift over to the daily, you can see what we're looking at. Note we do have earnings here in Deere on the 18th in the pre-market, so obviously anything can happen on earnings, but given everything we are looking at right now, we're looking for a little bit of a flag to form here, and then for this to blast off on the upside here in Deere. The support zone comes in from around 379.70 to 373.50. If it does end up closing below 367, that would render the idea no longer valid. And we are looking for a move to basically retest this prior high here at 399.36, and then there's a 127.2 at 413 or so. We do have a mid-cycle low due right around the end of February, so we're watching for this to form that flag and then for this to work its way back to the upside. So that's really how we look at all of our trade ideas. We look at our weekly and daily, come up with that some of the evidence, and then share that logic along with a sample trade plan for our level 3 and 4 members.
Great job, Arvi. Just love this work. All right, this is a Tools for Text mini segment, actually. We're going to look at cycle analysis, and I'm going to build into short-term analysis of Ethereum and look at the correlation to Bitcoin. So many people out there are crypto lovers. I have spoken much about my opinions about the cryptocurrency market and Bitcoin specifically. I'm not going to repeat that now. Most of you know what I believe. What I want to do now is look at it really agnostically, sharing the style of analysis we do a little teaching around it, and then you will get a sense for the style of analysis that we bring all of the time. So this is Ethereum you're looking at. This is the futures /ETH, called Ether futures. On the bottom is the slim ribbon PO. This is a signal indicator for the slim ribbon, which is on the chart up here. The slim ribbon, if you don't have this, is an indicator that's free. You can get this by downloading it from our site for the Thinkorswim platform. It's also available on other charting platforms, Wealth 365, where you can put this on, and also TradingView. So those are, we'll be adding it to other platforms moving forward. So this is the slim ribbon. It gives you little signals in here. When it's you get the upside green arrow, the ribbon has turned positive, and the slim ribbon PO turns green. When it crosses over and is not set up positively or negative, it turns blue. You get this blue PO, and when it turns negative, it turns red. You get the signals right over here when you're going to get upside resumptions, just as you got green right there, and it moved to the upside, and all of these negative resumptions right over here as it continued to move to the downside. This is some of the best momentum indicators you'll ever see. Wanted to give you that idea. Also on this chart is the 89-day moving average. So you have a 8, a 13, and a 21 exponential moving average, and an 89-day. This pattern in here, as you can see, it shows that basically it was going up and going down. I mean, and you can see the momentum conditions, but there is a lot more information that you could see doing cycle analysis. Cycle analysis looks at the rhythms in the market. It essentially looks at the money flows, and it's considered to be the heartbeat of the market. Now, our analysis we go through steps in order to figure out what that analysis is. So I'm going to switch over and look at what I would consider to be the first step. So we use these cycle brackets to show us where the average cycle length is. So important bottom here, important bottom here. So you can see this cycle right in here, and then the next cycle begins to get clear when you see that. The next cycle right over here, and then the next bottom right there. So bottom, 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 and bottom, and a bottom. And you can see the rhythm here in Ethereum. Now, what happens is that when you get a cycle that's positive, then you'd expect the next cycle to be positive, and the next cycle to be positive. Whoops, that wasn't. This failed over here and gave us information about it declining, turned negative in momentum, and then fell right to the expected timing for the bottom in here. So I wanted you to get an idea about that. You can learn about askSlim cycle analysis by going to our workshop page where we have an informational video on there. Now what I'm going to do is I'm going to go to the next slide, which shows you adding in what the actual cycles are. And you can see in here that there are actually more than one cycle. What I've illustrated is this dominant cycle right in here and how that showed up in reality. So we're looking at the ideal, which is the cycle bracket, and the actual, which is this upside cycle line. Actually, there's a big dominant cycle and a minor third in here, like music, minor thirds. And you can see the 3 cycles right in there and one right over here, and then some important information right there. So these the information I'm going to show you looking at the next slide, but you can get a good idea about the rhythm in here and how we analyze that. And I'm going to show you what the cycle shapes mean and how we get more information about that looking at the next fully analyzed slide right here. This chart essentially shows you, again, the cycle analysis, but I've put in these yellow areas, and where these are essentially periods of risk. When you get a downside phase right in here, that's when the biggest completion of the cycle comes on the downside, with one due out over here in the March time frame. Now, the important thing is cycle shapes. And you can see a bullish shape here, a higher bottom, and a bullish shape in here, a higher bottom, higher peak. And the momentum as it was positive, and then the momentum as it neutralized and went into corrections. Now, this is really important, and I'm going to blow this up so you could see these last couple of cycles right here. And what happened was that this failed. In other words, it tried to get up to this high, but then failed and took out where the cycle bottomed. And what that means is that this peaked way on the left side over here, which left all this time to fall for the 1, 2, and 3 minor cycles that are in here. When you get to the minor cycle and the dominant cycle all moving down together, you get the biggest downside moves. When they're moving up together, you get the biggest upside moves. So what's happened right in here? Well, you got the rally as expected, but it failed in these resistance cell zones. The reason they are cell zones was because this was a negative cycle and the probability is high it's going to fail in here. Now it's gotten below that minor low at 29.13, and it warns us that this is going on, that it's likely moving to the downside. So what that says to us is that we need to target where the highest probability lows are. I'll just grab this so you can see right in here. And the highest probability lows are down at these at that last low right over there, which is right around the 2200 level, and then these extensions right over here, which are at just under 2000, right near that support area around 1650, and then down over here way at 1200. So I don't really think it's going down to 1200 in here, but this area right under here, under 2200, really looks like a very strong possibility based on the analysis as it shows in here right now. So there you can see the little cycle breakdown in here. And if you look at momentum, well, the momentum was giving us negative signals as it was moving down, as that slim ribbon PO gives us those signals. The Slim Ribbon PO is only available for Level 4 members, and I'm going to show you how to get that in a special deal coming up for Level 4. And now you're neutral on the momentum right over here as the Slim Ribbon kind of just lays on itself. Once this turns red, you're really going to have an idea of how negative this is. And this formation right in here with the completed minor cycle, the rally, and the breakdown right here is a big warning. A breakdown is a negative warning under 2913. It's now 2808. That it's in this type of a downward stair-step pattern, and Ethereum to us looks like it's got a lot of trouble. I would look for 2200 sometime out over here in mid-March to early April is the way this lines up, If it comes down but does not break 2200, it is going to be in a more positive condition for the intermediate term. If it were to go up and make us wrong about this analysis, it would have to get over 3,300 for that to happen. If it got over 3,300, we would reevaluate that. Right now, the odds favor significantly that it's moving to the downside. So that is how I constructed Ethereum, going from the nothing in there with just the chart to the looking at the cycle analysis in a very basic level, to putting in the actual cycle lines, to the final analysis, which gives us this sense that it is moving to the downside. Now let's compare this to Bitcoin, because what I've done is now laid this analysis over the Bitcoin analysis. If we look at Bitcoin, it's a little bit different in that the cycles don't quite lay out the same. But what's really interesting is, now you can see the Ethereum comparison is the green dash. That's this cycle right in here and coming down into this period in mid-March to early April. That aligns with the period of risk in Bitcoin also. Bitcoin's got a little different pattern right in here, and it's come down to some support. It may be able to get some kind of a bounce in here, but here is that period of risk, and you can see the Ethereum right in here, period of risk, Bitcoin right in here, and we think that Bitcoin's going to get down to that support level at around 30,000 at best case. They're coming out to that mid-March to early April period. If it's able to move down, which we expect, and not get that far to the downside, it will be more positive, and we will reevaluate that. If it gets over these levels in here, there'll be a little bit of a warning. If it gets over 46,000 to 47,000, some pretty good resistance in there, but it really does not turn positive unless it gets over 52,000, way up over at that other resistance. So Ethereum lining up with the Bitcoin analysis in this period of risk suggests lower prices going all the way out into the mid-March to early April timeframe in what is a bearish scenario for both of these cryptocurrencies, and really all cryptocurrencies. I feel like, through my analysis, and I've shared that this is all just one big casino, and that it's only the speculators that are able to move it up with very little adoption. You can look at my past videos to see that. I don't want to get too far in that, because I've just brought you very agnostic analysis just based on the technicals that we look at. That is a look at cycle analysis in this mini tools for techs segment. Hope you really enjoyed that. Coming up, I'm going to give you my stock market analysis, looking at the Russell and the S&P 500 and the Nasdaq. But don't go away and don't scroll forward, because this is some amazing information that I'm going to share with you on a way that you could get all of our analysis. We're taking our top level membership. This is a special for level 4 trials for first time subs and upgrades. We're going to run this now for about another week, so this is the last chance you'll be able to get in this week these great prices. Level 4 gives you our annotated charts, our entire focus list live on the Thinkorswim platform. We create all that work on 84 symbols, the 84 best traded symbols of stocks, ETFs, and futures, and then you can load them on your Thinkorswim platform. You get all of our proprietary studies, the option bias indicator, market condition indicator, and grids with all of our best indicators on them in multiple time frames. You get the Thinkorswim Grid Archive, which shares all of our trade ideas and has our Slim Ribbon PO on there and our Reversal Scout. And you get to participate in the live events. These are free webinars where we talk about trade planning and best practices for utilizing our charts and studies. You get everything in levels 3, 2, and 1, and also our new Discord server where you could participate live. Arvi does what we call office hours several times a week, where he responds to questions does analysis, teaches tons of stuff, and then we have lots of ways that you can interact on our Discord servers. All of that, our 3-month special for level 4, 35% off. It's $303.75. That's $101 and a quarter per month versus a regular $159 a month. This is for one time only on this special trial. You have to go to askSlim.com. On the top of the main page is a link with that special offer. If you have questions or you need Matt to send you the link because there's some issue, write Matt at askSlim.com. And there is more. Level 4 Plus. This is, again, for first-time subs and upgrades. This is limited space because this is very hands-on. Now, we only have 9 spots available right now, so you have to write to Matt to reserve it. Matt at askSlim.com. You get to ask us for custom charts. Any symbol that you're interested in, and we work on that for you and share that with you. You can do that up to 2 symbols per week. And you get daily and weekly chart analysis for the Thinkorswim platform. Our charts include all of our cycle analysis, all of our timing indicators, key levels and projections, and access to full uploadable archive of all of the level 4 requests from all of our level 4 members. So you get a massive amount of custom analysis for you to learn and, of course, for you to trade and invest. This is exclusive report from our askSlim team, and you can ask general questions around trading issues, trade planning, and chart analysis. And you get, of course, full access in all of the other member levels, 4, 3, 2, and 1. This special 3-month trial is 35% off again. It's normally $239 a month, but we're going to give it to you for an average of $355 a month. That's $465 for this 3-month period, and you're going to save 35% on that. Do reserve your spot today. As I said, there's only 9 spots available. We must limit it because of all of the hands-on work that we do with you. So any questions on that, write to Matt at askSlim.com. The askSlim new Discord server, as I said, is included, and this is an opportunity to learn and grow in a community of like-minded traders. You interact with askSlim team throughout the week, and as we review all of our ongoing trade ideas. And we also host open floor Q&As 3 times a week, which RV, who is a great analyst, runs. That really does a great job teaching all of our option strategies, trading psychology, and more. And the last part of this, a bonus that you get, is our level 4 and level 4 plus askSlim market monitor. You can use any watch list on this, and you get our proprietary indicators, and you upload those and create this market monitor, and you can see the condition of any of the symbols that you want to by creating your own watch list or using our watch list. It's exclusively built with our TOS proprietary studies and indicators. So you must use Thinkorswim, and of course, if you do become a Thinkorswim member using our link, that's TD Ameritrade, our preferred broker, then we do get credit for that. Please go to our site. You'll see there's a carousel. Scroll over to the right and open up an askSlim.com through the askSlim.com website, a Thinkorswim TD Ameritrade account, and we will get credit for that. Just click on anywhere in this big area, and it'll take you to our special refer link page, and we get credit. Please do open up a Thinkorswim TD Ameritrade account and become a level 4 member. All right, stock market. We're going to look at the short term of the Russell, the S&P 500, and the Nasdaq. And I'm going to show you the market condition indicator, the MCI. I think you're going to find it extremely interesting when you look at this. And of course, there's so much interest in the stock market. And many of you scroll forward or are now watching this on YouTube, this video clip. Please go back and look at our special for level 4. And we also did great stuff in the full show that you really shouldn't miss, which is an analysis on Deere and looking at the trade setup that we did as a preview to 11 total trade setups. I think you'll find that interesting. And then I did analysis on Ethereum and Bitcoin that if you scroll forward, you might have missed. So please do see all of that and our level 4 special. All right, here is a look at the stock market, and I'm going to switch over now to off of Bitcoin here and look at RUT. Now I'm looking only at short term now. We have discussed time and again that there was risk coming out into March and maybe beginning of April. And now what I'm doing is showing you the minor cycle formations for the Russell 2000. So I'm just going to look at these last two cycles right in here. We call these harmonic families. If I go back, you can see the alignments of these cycles going way back as each of these rhythms looks, well, quite good. Now, if I only look at these last two right over here, you'll be able to get a good sense for the short-term cyclical pattern, the dominant inner cyclical pattern right in here. These are cycle brackets, which help us understand this. Many people write to us and they say, well, what is that indicator? We don't have a cycle indicator. What we have are our cycle brackets, and we manually find the rhythms in the market. So you could see in here this minor cycle right in here and a minor cycle here where they all bottomed right there. There's also an intermediate one that's grayed out there that has less effect right now on the market. But then all of them come down and bottom here. So this is a big period of risk here in the Russell. Something significant, the minor cycle here, it tried to rally, gave you this evening star pattern here, and then came down and touched or took out that low. That is suggestive that this rally in here has ended. You can see that the momentum using the slim ribbon PO was giving you these sell signals and negative conditions in here, but this kind of formed in a positive way, better than the other indexes, and it is stronger. I'll show you that using the market condition indicator. But it did give this break over here, and that is telling us that while it may still chop some in here, that we're really looking for an acceleration to the downside over here in March. So you have this minor cycle completion and then another one coming here that joins in with these other cycles. And there is potential risk for big selling coming out here into this period from about the first week of March out to the last week of March. So that shows the risk in the Russell. Now I'm going to move over to the S&P 500. And the S&P 500 has similar patterns, but is actually looking weaker. And you can see how it got below this low. Here's the cycle line right there, and is now trading below that. And that suggests that this is going to continue down, rally at some here, and then this yellow area is telling us where the big risk is. Again, early March to end of March is the way that lines up for big downside risk. Best case we can make is getting down to 42, to this low right over here around 42.30. That's only 120 points on the downside, but there are other targets down over here that we're looking at that are 41.20 and 4,000, which are much more likely on the downside in there. If you want to see the value of those yellow areas, that's where these tops come in here and set you up for declines, and that is setting up right in here where it looks like there should be some significant declines. Actually setting up earlier, because you can see that this is, the slim ribbon is negative right over here. It neutralized for a day and then turned negative again. You've got this resumption signal right there, perfectly timed to the downside. So the slim ribbon is in a negative configuration right over here and widening. You see where it went negative here and began to widen. Well, you accelerated on the downside. That could happen now. It could be a lot worse and accelerate now instead of out over here and then do it again out there in March. So failing here at these resistance zones right there is what was expected, and now moving to the downside pretty significantly. And again, this points to lower prices out through mid to late March is what that looks like. And we'll look at the Nasdaq right in here, and the Nasdaq again setting up in similar fashion, also having broken this key level over here. Now this is a very negative setup, and it would need to get over this level here at 15,177 in order to repair itself. It's a very low likelihood, and much more likely it's going to get down to that weekly support right there at 12,900 approximately, and that could happen quite quickly. So that's our best case really for the Nasdaq, again pointing out into that mid-late March or early April period out over here. April may be a little bit too far, but the weekly patterns do suggest that. And then this would only be the first bottom this year, and a lot more chop and lower prices, we think, in a bear market coming out for the rest of the year. Look at these signals right in here. Slim ribbon stayed negative this whole period here. The slim ribbon PO was telling you that right in here, and you can see these these signals in here which tell you that downside is likely to continue, that the momentum is likely to continue on the downside as it continued to move on the downside. I can go way back and show you periods where it was positive, and that the signals were giving you conditions that were quite positive. And you can see that way back over here where the slim ribbon was aligned on the upside. This, I'm looking back into July, August of 2020. And you have all of this positive alignment right in here, and you have all of these signals from the slim ribbon PO giving you resumptions of momentum on the upside. So this is a great pair of indicators here. And again, the slim ribbon is available free, and that you can put on multiple different platforms. Slim ribbon PO is only for our level 4 members, which you could become, and that is available only for the Think or Swim platform. So this is a good look at the Nasdaq, which is set up to continue on the downside, and projections down under 13,000 and sometime in the March time frame. So that's a look at the markets. I'm going to show you one more chart in here. This is the market condition indicator. This is a very unusual indicator because it's built on multiple time frames. And when it's trading red and below what we call the swing zone, so the swing zone is the positive 25 to negative 25. When it trades into the swing zone, as it does here, it tells you that the longer-term conditions of the market are a little bit stronger for the Russell, as you see right in here, as it's now testing that area, than you see here in the S&P 500 and the Nasdaq and the Dow Jones Industrial Average. So this is a great way for you to tell which are the strongest and weakest indexes. And you can see in here the very significant weakness in the S&P 500, Nasdaq, and the Dow Jones Industrial Average, with the Russell being stronger. Very clear in there. And this, again, is a great one of our proprietary indicators. And I showed you on the charts looking just a few moments ago that the Russell was stronger. And you can see why, looking at this, that it really illustrates how market conditions can be different in different indexes. And basically, none of them very good right now. As a matter of fact, quite weak, as a good reflection of the weakness that we see here in the stock market. That's it. I hope you found that, well, illuminating. And we want you to be incredibly successful, because your success really is our success. You can learn more about us by becoming a free member or signing up for Level 1. If you're an index trader, Level 1 gives you our report every single day about the stock indexes. And Level 2 gives you our live charts on our chart streams for the stock indexes. You will see great information in Level 2 for trading those indexes. If you're on YouTube, please subscribe to our channel. Give us a thumbs up. Do like the video, because that helps us. And do watch our member videos in the playlists. And you can see a lot of our past shows on there. On Twitter, follow us at askSlim. Any questions for on our membership, on our huge offerings of education or analysis, write to Matt at askSlim.com. That's it for this show. I want you to be so careful, because it is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been